In 1964, a dollar's worth of pocket change contained more than 7/10 of an ounce of silver. If you'd had that same dollar as a paper note and held on to it all these years, by today you would have lost about 90% of your purchasing power. If you'd kept that dollar's worth of pocket change, on the other hand, let's say you had 4 quarters, those coins would be worth roughly $19 in today's market, and your purchasing power would be preserved. For example, back in 1964, a gallon of milk would have cost you about 36 cents. Today, that same gallon goes for about $4.38, roughly a 12-fold increase. So even with all the food inflation that we are experiencing at the moment, if you've got some silver quarters, they'll actually buy you more milk today than they would back when the coins were in circulation. And that is what we are going to be talking about today. Silver's remarkable role as hard money that can protect purchasing power over long periods of time, and also why right now is such a good time to be getting into this millennia-old store of value. So, let's get to it. Hey everybody, Smart Silver Stacker here. I do want to just take a moment to say thank you for tuning into this video today. If you get some value from it, please do give it a big thumbs up down below, and while you're at it, why not subscribe to the channel? So physical gold and silver are not really investments, they are money. Not like paper fiat currencies that derive their value simply from the promise of a third party, but real physical, tangible, scarce wealth with inherently useful and desirable properties that can store value over long periods of time. And it is true, the purchasing power of gold and silver, they do go up and down over time. Gold less so than silver, but their value relative to other assets does change. The difference, however, between precious metals and fiat currencies like the dollar is that while gold and silver's value does go up and down over time, paper money only goes down for the most part, especially on a long time frame. And while paper currencies do serve as an effective medium of exchange in the economy, at least until they don't, their constant and predictable devaluation makes them a terrible vehicle for long-term savings. There is not a single paper currency in the world that existed 100 years ago that has not been significantly devalued, and the majority of them don't even exist at all anymore, except maybe as curiosities or relics in a museum. On the other hand, hard money like these Morgan and Peace dollars maintain at least the same purchasing power and value as the day they were minted. And gold and silver have a much longer history of preserving value even than that. You could be a Roman 2,000 years ago, and if you're holding some paper with Caesar's face on it, or whatever kind of fiat currency they had back then, maybe today that paper note might have some value as a relic of the past, but it's not worth anything as a unit of currency. But not so for a denarius struck in silver. And yes, I know, a 2,000-year-old coin would probably have a lot more numismatic value to coin collectors than simply its melt value, but the truly amazing thing to me is that the silver itself, dug out of the ground by some Roman miner 2 millennia ago, still has the same purchasing power today that it did back then. You could take that metal, melt it down, sell it for the fiat currency of today, and then go buy some groceries. And there is not a single paper currency in the history of the world that even comes close to that ability to store value over such long periods of time. Speaking of value, don't forget that if you visit today's video sponsor, silverbotanicals.com, you can always save 10% off of your order by using coupon code STACKER. Silver Botanicals' line of household and personal hygiene products utilize the power of nano silver. And this month, if you make a purchase of $50 or more, you can get yourself a free, brilliant, uncirculated 90% Roosevelt dime, just like this one, when you use coupon code STACKER at checkout. So check out silverbotanicals.com today. And like I mentioned earlier, the value of gold and silver relative to other assets, it does go up and down over time. And right now, they're both pretty low, especially silver. Just take a look at this chart of the Dow to silver ratio. There's only one other time on this 100-year chart that silver has been cheaper relative to stocks than it is today. And that was in the year 2000 when the tech bubble was peaking and the price of silver averaged just $4.95 per troy ounce. And remember, precious metals, they're not like fiat currency. They don't go down forever. Their values relative to other assets are more cyclical, and so the time to buy is when the metals are extremely cheap, like they are today. Think about it this way. If you purchase physical silver today with the Dow to silver ratio close to 1800, and then eventually we get a rally in the metals, and let's say the ratio returns to the level it was at in 2011 of around 300. At that time, you would be able to buy more than 5 times the amount of stocks with your silver than you can today. Of course, there's no guarantee that that's going to happen at any particular time, but it is the cycle that we have observed historically, and I can see no reason to expect that it will not repeat again at some time in the future, especially when you take into account the current geopolitical and economic situation, with runaway inflation, staggering levels of debt, and the threats to the US dollar status as the world reserve currency. That's why I like to use precious metals as a hard money savings account. Because this stuff, it's only backed up by the faith and credit of a third party. You know, the federal government and the Federal Reserve. And while I'm sure all those central bankers are good people who have all of our best interests at heart, I still prefer to save in money with a history going back thousands of years, and that doesn't rely on the promises of a counterparty to retain its value. Because if I decide to leave my wealth to my children or grandchildren or great-grandchildren, you get the idea, I'd still like it to be able to buy something by the time they get it. Gold and silver really are one of the few forms of generational wealth that you can rely on to always have some value. And likely at some point in the future, whether that's the near future or further down the line, it's kind of hard to say because I don't have a crystal ball. But if history is any guide, there's going to come a time when this silver will be more valuable relative to other assets, stocks, real estate, food, other commodities, than it is today. One question that I see frequently in the comments on these videos is, at what price do you consider selling your silver? Well, for me, the answer to that question isn't necessarily a dollar price. It has a lot more to do with the value of silver relative to those other assets that I just mentioned. And that's why indicators like that Dow to silver ratio that we took a look at earlier, I think those should play a much larger role in a stacker's decision to exit a position in the metals rather than simply how much paper fiat currency one can get for their bullion. Now, one thing you do give up when you store your wealth in physical gold or silver bullion is any kind of yield. Currencies like the dollar have the big advantage that you can deposit them in a bank and earn interest. And before 1971, when the dollar was backed by gold, this really was a great deal for the American saver. Because the dollar was as good as gold, but still you earned income on your savings. So in a scenario like that, why would anybody bother holding physical metal? Well, the real problem with that is that in 1971, Richard Nixon ended that convertibility into gold.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
And over the next 9 years, the price of gold went from the fixed $35 an ounce to more than $800 an ounce. So was the interest really worth it? Well, it's definitely not worth it today when the 1 to 2% interest you earn on any dollar savings is dwarfed by an inflation rate in excess of 8%. And the same goes for US bonds. Right now, the 10-year Treasury is yielding just under 3.5%, which, by the way, is the highest level since 2011, so it's going to be interesting to see how sustainable that is. But even if you commit to a 10-year time frame right now, the best you can get on a bond seems to be an annual loss of about 4.5% of your purchasing power. So in today's environment, I don't think that the pittance of interest you can collect is a worthwhile reason to be in paper and not metal. And speaking of inflation, this is ultimately the biggest reason that I believe in saving in silver. We just got the August CPI numbers that were higher than expected, and that caused a big sell-off across markets as investors now believe the Fed is going to get even more hawkish to get this inflation monster under control. But if you ask me, this high inflation number that we got in August is just further proof that the Fed is incapable of getting inflation under control. They've already been hiking rates. They've already supposedly committed to quantitative tightening and shrinking their balance sheet, although we haven't really seen a lot of that yet. And still, inflation continues to exceed investor expectations. When will markets finally realize that the Fed simply cannot raise rates to the levels necessary to fight this inflation without completely imploding the economy? Well, I suspect that it will come sometime after the midterm elections, when managing voter approval is no longer the primary priority among our leaders. That is when those sales from the Strategic Petroleum Reserve are going to end, oil and gasoline are likely to begin moving higher once again, and also the EU embargo against Russian oil will be going into full effect, putting even more upward pressure on the cost of energy, and along with it, the price of just about everything else. So, this window that we have to acquire precious metals at ridiculously low prices, it could be closing soon. And none of this is financial advice, I'm just sharing with you my thoughts, but I intend to take advantage of this market's irrationally low valuations of gold and especially silver, and I am going to keep on stacking. So, what do you think? Are gold and silver the way to go for wealth preservation moving forward? Or maybe you think sitting on some dry powder is the way to go in case of a huge market crash? Or maybe you just think dollars will ultimately be the best way to preserve wealth? Leave me a comment down below to let me know what you have to say. I always love to hear from all of you. Thank you very much for watching today. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.